gold financiers like Manappuram and Muthoot that's in the spotlight on Jefferies' latest note.
Yes, so Jefferies has initiated coverage on gold financiers and they are quite positive on both Muthoot as well as Manappuram. Of course, they prefer Muthoot versus Manappuram, but nonetheless, they have a buy stance on both the stocks. The target price for Manappuram is set at 270, while for Muthoot, they have a target price of 2,220 bucks. They are saying that the gold price itself has quite a bit of tailwinds, so that augurs well for this entire industry. These companies are also focusing on diversification, so stepping outside their comfort zone of gold loan into others as well, which provides that balance to the growth going forward. A lot of factors which are supportive for the gold prices going forward, plus the asset quality issues are quite limited, so the risk on account of that is quite limited, and of course it's a high return and improving earnings kind of scenario for these companies, and all of this augurs well for these gold financiers. Muthoot they prefer because it has a better gold price leverage, but Manappuram is also having that thrust on diversification, and the valuation is attractive because remember Manappuram has been going through its own issues with respect to a lot of overhangs with respect to what's happening at the company level and all those allegations, etc., that had come up. In fact, this entire sector was in the spotlight, Nikunj, because of that, what had happened to IIFL Finance and the gold financing issues. But maybe those are at end and good players will probably eat into the market share, and that is what Jefferies is also banking on.
Yeah, that's typical. When you have a regulatory action, you always will see that the established players and the ones which have edge, they always tend to gain market share. But historically, whether it's right or wrong, I'm not getting there. But there's always this halo factor which comes in some of these gold financer companies when gold prices are going higher. Gold in this year, I was looking at data last night, that gold in this year has given a return of nearly 17%. That makes gold a much better performing asset class than even our good old Nifty 50. So that tailwind, which is a psychological tailwind and also a business advantage, of course, because if gold prices go higher, your collateral requirement changes, that gives you more cash flow, that gives the ability for everyone to raise higher ticket loans. All that will be at play, but typically these stocks tend to outperform. So I think after the regulatory issues, there is going to be market share gain for existing companies. This is a space where gold prices naturally act as a trigger, and it increases the business, and interest rates now they've peaked out and liquidity is coming back into the system. NBFCs can also borrow money from the wholesale market, which in a sense has been the trouble spot.
Okay, there you have it. That's the view coming in from Jefferies, talking about the high returns and improved earnings for some of those gold financiers. But moving.
If you like this video, then like, share and subscribe to ET Now.